Hello friends, in today's session we will discuss section 54F of the Income Tax Act. Section 54F talks about exemption from the capital gain. What are the provisions given under section 54F? Let us start with discussion. So the condition is assessor should be individual or a HUF. So only the individual or a HUF can claim exemption under section 54F. If any assessee other than individual or HUF, he cannot claim exemption under section 54F. Further, the asset which is transferred must be the long-term capital asset. So if the short-term capital asset is transferred, you cannot claim the exemption under section 54F. Asset must be the long-term capital asset. Further, such asset should not be the residential house property. So, what is the main provision? An assessee being an individual or HUF has transferred the long-term capital asset and not being a residential house, then he can claim exemption under section 54F subject to certain condition. So, the person who has transferred must purchase the residential house. So, here the asset transfer is other than a residential house property, but he have to purchase the residential house within the period 1 year before from the date of transfer or 2 years after from the date of the transfer. So for the purpose of purchase of a residential house, the time limit is 1 year before from the date of a transfer or 2 years after from the date of the transfer. If he purchase such residential house within the prescribed time, then he can claim exemption. Now the question may arise, suppose assessee may go for a construction of a house property in case of a purchase, then the time limit should be the 3 years instead of a 2 years. So he must construct the residential house within the period of 3 years from the date of a transfer. Then and then only he can claim exemption under section 54F. Now, what is the quantum of the exemption? So, if the cost of a new asset purchase, that is, what is the new asset purchase? New residential house is more than the net consideration. Suppose the full value of a consideration is 100 rupees, expense on a transfer is same, for example 1 rupees, so the net consideration will be 99. So your net consideration is 99, however you have purchased the house for 101. So here the cost of new asset is more than net consideration. So there will be a no capital gain. So here you will claim 100% exemption. However, if a cost of new asset is less than net consideration, same for example cost of new asset is 100 and a net consideration is 110. So here the cost of new asset is less than net consideration, then the exemption shall be the capital gain multiplied by cost of asset divided by net consideration. So whatever the amount you will get from this calculation, that will be the exemption under section 54F. So for the purpose of claiming 100% exemption from the capital gain, you must have to invest the net consideration into the cost of a new asset. If you are investing 100% of a net consideration in the cost of new asset, then you will get 100% exemption from the capital gain. If you are investing the less amount than the net consideration, then you will not get 100% exemption, you will get the proportionate exemption under section 54F. Now, this section will not apply. So the exemption will not be available if assessee own more than one house other than a new asset. So other than the new asset for which you are claiming exemption, you should not own more than one house. So you can own maximum 2 houses, that is one in you are living right now and other one which you are purchasing for the purpose of claiming exemption under section 54F. So if a SSC must not own more than one house other than a new asset. So if SSC own more than one house other than a new asset as on the date of a transfer, then exemption will not be available. Further, if SSC purchase a residential house other than a new asset within a period of 2 years after the date of a transfer. So if SSC purchase within a period of 2 years from the date of a transfer a new residential house other than one for which you are claiming exemption, then also this exemption shall be withdrawn. Or SSC construct residential house other than the new asset for which you are claiming exemption within a period of 3 years after the date of a transfer, then also exemption will not be available, and the income from such house property other than one house property owned as on the date of a transfer chargeable under the house property. If this condition is fulfilled, then your exemption will be withdrawn. You cannot get exemption. So you cannot purchase the new house property other than one for which you are claiming exemption within period of 3 years, 2 years. You cannot construct the new residential house property within a period of 3 years other than one for which you are claiming exemption. If SSC purchase or construct such house property within the period prescribed above, then capital gain which is originally exempted shall be chargeable as a long-term capital gain in the previous year in which such asset is purchased or constructed. So such exempted amount will be chargeable to the tax in the previous year in which such asset is purchased or constructed. One more condition: the asset for which you are claiming the exemption by investing in the residential house property, such new purchased residential house property, if you are transferring it within 3 years from the date of a purchase or a construction, then whatever the exemption you have claimed for the purpose of a capital gain should be chargeable in the previous year in which a transfer should took place. So you have claimed the capital gain exemption via purchasing the residential house property under section 54F, and if you are transferring such house property within a period of 3 years from the date of a purchase or a date of a construction, then such exempted amount will be chargeable to the capital gain in the previous year in which a transfer has been taken place. Now, there may be a case that suppose the SSC has transferred the SSC has transferred any asset other than a residential house property being the long-term capital asset in the month of March 2020. Now he cannot determine the house property till the last date of filing the income tax return. Then the government has prescribed the capital gain deposit scheme. So he can deposit the amount in the capital gain deposit scheme in a separate bank account before the due date of filing the return, and on the basis of deposit made in such account, SSC can claim exemption under section 54F. However, such amount must be utilized within the specified period. In case of a purchase, 2 years after the date of a transfer, or in 2 years within the date of a transfer, and in case of a construction, 3 years within the date of a transfer. If such amount is not utilized or not utilized fully, then such proportionate or the amount which is not utilized will be chargeable as a capital gain in the year in which 3 years from the date of a transfer is expired. So such amount is chargeable in the year in which 3 years from the date of a transfer is expired. Now we will understand example for a better understanding. Mr. X sold old jewelry for rupees 11,50,000 in January 2020. So here cost of asset is 4,52,000 for 2005-2006. So here what is the definition of a long-term capital asset? Any asset held more than 36 months. So here the jewelry, it is held more than 36 months. So it is a long-term capital asset. Further, here SSI is a Mr. X, so individual. So he can claim exemption under section 54F. So as per the condition section 54F, individual or HUF can claim exemption. Asset must be long-term asset, capital asset other than a residential house property. So here it is a jewelry. Expense on a transfer is 7,000. Residential house purchased in Feb 2024 rupees 5 lakh. So he has also purchased residential house property. So section 54F condition is fulfilled. Index is given for 56 is 117 and 1920 is 289. Now we will consider the answer. Gross consideration for sale is 11,50,000. Left expense 7,000. So net consideration is 11,43,000. Now less index cost of acquisition. So cost is 4,52,000 divided by 289. That is the index of the transfer year. Divided by the index of the purchase year. So the index cost will be 11,16,479. So long term capital gain will be the 26,521. Less exemption. So exemption will be capital gain, that is the 26,520 multiplied by the cost of new asset, that is the 5 lakh divided by the net consideration 11,43,000. So exemption will be 11,601. If SSE invests this 11,43,000 fully, then he will claim 100% exemption. But he has not invested fully, so he will claim proportionate exemption. So the long term capital gain for 1920 is 14,920. If such house is transferred in June 20 for rupees 6 lakh, so this new house is transferred for which exemption is claimed in June 2020. So it is transferred within the period of 3 years. So it is the short term capital asset. So the full value of consideration is 6 lakh, cost is 5 lakh. So short term capital gain is 1 lakh. However, as per the condition prescribed under section 54F, the asset is transferred within the 3 years from the date of a purchase. So this exemption which is claimed 11,601 will be treated as the long term capital gain in the previous year FY 2020-21. So you are breaking the condition prescribed under section 54F. So this exemption is withdrawn and will be chargeable as a long term capital gain in the previous year 2020-2021. Now, if a Mr. X purchased other residential house property on a January 2020, then as any other residential house property is purchased within the period of 2 years from the date of a transfer of an original asset. So Mr. X had purchased other house property other than one for which the exemption is claimed. So here the condition under section 54 is breached. So rupees 11,601 which is claimed as an exemption will be treated as a capital gain for year FY 2021. So here the exemption is chargeable to the capital gain in FY 2021. So this was the discussion for section 54F under the Income Tax Act. I hope you will understand this. Thank you.